The question I have is for the panel as a whole, and it's just your impression as to, given these moderately optimistic projections, what is your sense about the whole secular stagnation debate?
We'll try to be crisp. Why don't we start with Jacob and move this direction?
Well, I guess from a European point of view, secular stagnation of productivity, et cetera, I think it would be predicated on a complete stop of regulatory and structural reforms in Europe, because I continue to believe that the euro area is an area that would have substantial improvements of potential growth and productivity if you implemented liberalizations and integration at the European level, whether we're talking about the digital economy, whether we're talking about the energy and utility sectors, or certainly beyond the banking sector, the entire financial services industry. So I don't really buy that argument because it requires me to be very pessimistic on regulatory reform in Europe.
Well, for China, I don't think secular stagnation necessarily is a very powerful argument, and I say that really for two reasons. Yes, China is the biggest economy in the world on a PPP basis, but on a per capita basis, they're at roughly one-fifth the U.S. level. That's about where Japan was in the 1950s, where Korea was in a similar time period. All these countries grew very rapidly for 20 years after that. So in terms of the potential for catch-up, again, given the right kind of reforms, I think it's very substantial. And if you look internally, there's a vast disparity in levels of economic performance as measured by productivity between the state sector, which is still very large in some domains, and the private sector. In services, for example, the share of investment by the state is 5 times higher than it is in manufacturing, and state service firms have a return on assets of half that of private players. So if they follow through on the commitment to liberalize, which I think they've made some progress on, and open up large parts of the service sector to investment by private firms, there's an enormous potential for increased productivity in the service sector, which is now absorbing more than half of all investment and accounts for about 45% of GDP. So I think, another way of just summarizing this, I think China's potential growth for the next decade is probably in the 7 to 8% range.
As Dick said very strongly at his last presentation of this kind here, there isn't an argument for a middle income trap for China. He's very much skeptical of that. And our absent colleague, Arvind Subramanian, made the case that the middle income trap actually doesn't apply to a lot of countries. So just to...
So in its starkest long-term version, I'm not buying secular stagnation. I think productivity growth in the United States, but I think also in other advanced economies, is going to eventually return to its historical averages. And in part, I think that simply because that's been the pattern. If you look at the last 100 years of total factor productivity in the United States, it's had periods of above trend and below trend growth, but eventually it sort of fluctuates around that. It has fluctuated around that average in relatively short periods of time frames. So I do think that over the next 3 to 5 years, we could have a global economy, a U.S. economy that looks something like the structural stagnation story. I do think, given how low currently the growth of the labor force is, and I do think there is a medium-term sag in productivity that's been associated with the fact that investment spending has been so weak, that the equilibrium real interest rate could be lower. And you combine a lower equilibrium real interest rate with the very low rates of inflation we have, I do think there are vulnerabilities that will look like the kind of concerns that people are worried about secular stagnation, and that could manifest itself if we got some negative shocks. So I think in the medium term, it could be that we find ourselves stuck at the zero lower bound, which is a manifestation of secular stagnation more frequently and with more significant negative consequences than we would like. even though over the longer haul, I don't really see any reason for there to be a world in which we have just chronic shortages of aggregate demand that we can't get out of. And if we were in that situation, I think it would be quite appropriate at that point for central banks to reconsider their inflation objectives and ask whether or not their inflation objectives have been set too low. One way to get out of secular stagnation is to give central banks more room to cut nominal interest rates, and one way to do that is to raise inflation targets. So even if we faced something that looked like a low equilibrium rate for a very long time, I think we have ways that we could respond to that.
I'm going to put in my 2 cents as well, and actually, independently, I come out very similarly to my colleagues. I think that there is a very real potential for confusing a run of subpar growth and a, what we, as Dave calls, a medium-term drag on growth from underinvestment with a trend. That was the fight we had over Japan in the 90s. And we saw that from 2002 to 2008, Japan had the highest per capita growth rate and the highest TFP growth rate in the G7. People forget that. These things are not necessarily as destiny as people think. And picking up on some things that both Jacob and Dave have said, I think a part of the untangling is there is still, no matter how much, even people who advocate fiscal spending tend to backwards assume that the impact of past fiscal errors is not very large. But by the time you start putting in accounting for the state and local government cutbacks and the other fiscal stance problems in the U.S. post-2010, accounting for, Jacob and I can disagree about the merits of it, but accounting for the fiscal impulses that we saw in Europe, particularly in Southern Europe, over the period of the crisis. Once you start putting all that in, the shortfall of growth to explain actually isn't as large as people make it out to be. And the final point I would add to that is, let's stipulate that my colleague's forecast is broadly right. I think it is. If that's the case, we're going to get 2 more years of steady growth, relatively steady growth in China, US, and upside surprise in Euro area. And you can throw in Japan even. And that will mean that the Raghu Rajan, now taken by Larry Summers and others, argument that you can't have growth without a bubble will effectively have been disproven. Mark my words, 2 years from now, we're probably going to be able to say that, and that will be a very good thing.